All right. All right. Let's get started. I want to welcome you again. And my name is Bob Cohen. I'm a SCORE mentor, and I'm going to be your presenter tonight. And you are joining us here at SCORE. And I just wanted to talk for a minute about what SCORE is and who we are and how we work. And I would welcome questions through the chat as we go along. But so to start with, SCORE has probably got the largest network of volunteers that work with small businesses in the nation. We're a national organization. We've probably got about 10,000 members in 240 or 50 chapters around the country. SCORE Cleveland is one of those chapters. So our mentors are all volunteers, and they are here to help small businesses grow. Our mission is to foster small, vibrant businesses through mentoring and education. So the workshop we're doing tonight is part of how we work. SCORE nationally, as well as SCORE Cleveland, does workshops all the time. There's probably 150 workshops that you can find on our website, and I'll show you that in a minute. So in 22, we were chapter of the year. We started somewhere around 501 new businesses, created jobs, as you can see, and provided total chapter services. But I really wanted to talk about the fact that the economy, at least 50% of the economy, is based on small businesses. So it's really important for us to help grow small businesses, to have family wealth, to have business wealth, to help the economy to grow, and to help people individually to create wealth for themselves. So that's really important. All of our services are free, and we work with the SBA. We also raise a lot of funds on our own. In fact, the majority of the funds that we raise are through that. So one nice thing is that the network that we have of workshop presenters, of mentors throughout the country is about 10,000, and I can rely on any of them for any particular information. So we try to match up our mentors with the needs of our clients. And when that doesn't match, we will, from Cleveland, we will go out to a national organization and bring people in. So I really wanted to just quickly show you our website, and I'm going to go live to it for a moment. I just think it's a really good resource for you. Everything on here is free. So just want to move this out of my way. As you can see, it translates into about 70 different languages. If I hit the, hit the down arrow here, all kinds of languages that it does translate into. So if you need to, you can go on to this and translate it into whatever language you're speaking, hopefully. The other thing is you should be looking at the local mentors here in Cleveland. You can request a mentor very, very easily by just hitting local mentors and hit request a mentor. It'll take you to a request form that you can fill out. And what we'll try to do is match you to the best of our ability with the mentor that is as close to what your needs are as we can get them. Obviously, we don't always have that right off the bat, but we will get you to the right people. And we try to get back to you within about 48 hours. So the last thing I wanted to show you on this was, let me get back. And there are all kinds of templates and resources on here. So if you're starting a business and you need financial help, if you need a business plan, if you need other kinds of financial information, there are scores and scores, excuse the pun, of good templates available for you, and they are all free. So when you get a chance, tool around this, and let's go in from here. Okay, so I am now going to go back to the slides. And let me move this out of the way here. And I think we're in presentation mode, so we're good to go. So I want to talk to you a little bit about startup basics. That's what tonight's presentation is about. And it's basically to see if you're ready to start a business. This is a 5 series, 5 program series or 5 module series. And tonight we're doing Startup Basics. Next week, Bob, who's sitting here with me. Bob, say hello, everybody out there can see you. There you go. Um, um, Bob Fedor will be doing the business concepts. The following week, I think I do the marketing plan. And then we will have a session number 4, 3 weeks from tonight, same place, same channel, same place. We will be doing financials, and we'll actually be talking about financials, both as it relates to your business plan, how to start up, and how to work from there. And then the last session, we've got an expert on funding and finding funding and finances. So we'll be talking about that as well. So, tonight, again, Startup Basics. The idea here is to give you an opportunity to figure out if you've got a business that's worth moving forward with or not, making a go or a no-go decision. So, and then to use the materials that we're working with over the next 4 or 5 weeks to actually build a business plan that makes some sense. And you'll see how we organize it as we go along. So there are handouts for this session. You may have already gotten them. You should have gotten them today via email. If you did not, you will get a copy of these slides anyway. And I've got these live linked so that all you have to do is go in here and hit them. So tonight, actually, we're going to be talking about legal forms of business, a vision statement, a readiness assessment. I'm going to show you a SWOT analysis. We're not going to do much with that tonight, but the backbone of what we're working with here is Ann's Nursery. Ann's Nursery is a fictitious business that we used. Actually, Anita here put together the business plan for us for Ann's Nursery. And but what's nice about it is it's a really good case study. So even if you're not in the same business as Ann, if you're a service business, if you're a retail business, business to consumer, business to business, this organization of a plan makes good sense. So the benefits of tonight's workshop, again, is the feasibility plan. Is this a go or no go? It's going to take you through the decision-making process, provide you with information so that you can make a business plan and really begin to articulate your business and your ideas. And then the core information that you do will be helpful for you to complete a plan. And if you're looking for funding and financing, every business funder in the way of a bank or an investor or a partner is going to want to see a business plan and a financial plan. So this is going to give you some good key directions to get yourself started. So I'm just going to go through some myths very quickly because this is not part of the bread and butter here. But, as an entrepreneur, you won't have to work hard or put in long hours. It's absolutely the opposite. We've got a couple entrepreneurs in the audience here. So, unless you've got something that's automatic and you can press the button and go, you're going to be working 24/7. Your product or service is unique and there's no competition. That is a big myth. Even if you've got something that has a unique component to it, either somebody is already thought about it or there's some other portions within somebody else's business, your competitors, and we'll talk about competitors a lot over the next 5 weeks. So there's competition out there almost no matter what. And if there isn't, they will not do a knockoff of your business very quickly if you've got a good, successful concept. Business owners can deduct everything, so you won't have to pay taxes. Again, just ask a business owner and they'll tell you that, especially small business, most of the small business income flows to your personal income. Yes, you can write some things off, but all in all, you've got to continue investing. And if you are, showing losses every year so that you don't have to pay taxes, that's a real issue as well. And you won't have a boss. Well, it's absolutely the opposite. Everybody is your boss. Your employees are your boss. Your customers are your boss. Your banks are your boss. So you're going to be busy satisfying all those bosses. And of course, you get to do whatever you want. I don't think so. But you need to really focus on your business. And a lot of people that we work with who we mentor, one of the reasons they'll come to us is so that they can work on their business if they're already working in their business. It's one thing if you're in your business and you're working day to day and you're working 12, 15, 16 hours a day, providing your clients or your customers with whatever it is that you do or sell. And if you're not thinking about your business from the top down in terms of how to manage it, what you need to make it successful, then you will not be successful. And that's one of the areas that SCORE is really good at. So, think about this for a minute. After 2 years, and you can look at different data, but for all intents and purposes, it's somewhere in this vicinity. After 2 years, 24% of businesses fail, and I would probably argue that it's even more so. After 5 years, about 50% of all businesses fail. And one of the things that helps people to fail is that they're not planning. So people don't plan to fail, they fail to plan. So that's a really critical thing to think about as you continue thinking through your journey starting your business. So I'm going to go through this very quick. Education and experience in the field. That's probably one of the most important aspects of what sits on this slide. All too often, people come to us and they want to start a business and they have absolutely no experience in that business from a lot of different reasons. Just because you know how to cook, or just because you're a chef, or even if you're working in a restaurant, doesn't make you really a good prospect for starting a restaurant without having worked in managing restaurants, working for other restaurant owners on the management side of it. Obviously, a strong work ethic, effective time management, ability to multitask. Those are all things that if you didn't have those, you wouldn't be sitting in this room, okay, or on this call. So adequate capital, I can't stress enough how important that is. Yes, you can bootstrap. It'll take you a lot longer, and you won't necessarily have the capital to cover issues that come up. So you want to think about having the capital. Do you have your own assets? Are there assets that you can tap into elsewhere? And we will get into that very deeply, actually, in the last two parts of this series. Tools and equipment. So these are just things you need to think about from a financial perspective: leasehold improvements, license permits, professional fees, inventory. I can't tell you how many times we work with customers that have been in business. I say customers, I meant to say clients. We work with clients that have been in business 2, 3, and 4 years and still don't know what some of these things cost them. So those are things to think about as you begin to put together your business. And you'll see some of that in the examples that we go through with Anne's Nursery. Other things, to think about: how much does it cost you to live? Again, I work with clients, I'm sure Bob and Anita do as well, that have been in business 2 or 3 years and are not paying themselves. They're on subsistence of some sort because that business is not supporting them. And that's something that you need to think about as well. So as you begin thinking through, and we'll talk about pricing later on, we'll talk about how to put together your finances. You need to consider what it's going to take for you personally in order to be able to live as you begin putting together your business. And if you don't have that kind of adequate capital, that could be a real issue. If you're going to start a bakery, don't buy your materials to make your products out of your pocket. Use your business, keep your business and your personal finances separate. Think about if you've got outstanding debts, because if you're going to be borrowing money and you don't have a good credit rating, it's going to be difficult. Not impossible, but very, very difficult. It is difficult for startups to get funding in the beginning when they're starting up. Again, we'll cover a lot of that in the fifth part of this series. And then think about what you need to have on hand to cover your expenses and to have cash flow in your business for the next 6, 12, 18 months, because not all businesses will end up in a situation where you're going to start making money in, day one or in the 6 months or 12 months. And there's nothing wrong with that if you're planning adequately to deal with it. There may be businesses, and think about this. Think about how long it took Amazon to get to a point where they're actually making money. I mean, I don't know, 10 years? At least decade. Yeah. So there are you can start a business, and if you plan it properly and you know you're going to lose money and you've got the backing behind you, then that's fine. And let's say in in 18 months, year and a half later, based on your financials as you put them together, you're going to make money, and that's when your break even is. That's fine. And if you're working with a bank, then potentially they will accept that as well. So let's talk about some business options. And one of the handouts is going to be, um, well, we'll get into that, your actual business setup. But so there are several options in which you can think about starting a business or buying a business. And so the one I'm going to talk about first is probably the most obvious and maybe the one that's in the back of your minds, and that's starting a new business. And that's starting from scratch. Now, this is by no means all the advantages and disadvantages of doing that. There are more than are here. But, on the basic side, and we're looking at all of this kind of at a 20, 30,000 foot view. So these are highlights. You're not going to be hampered by a previous reputation or technologies of an existing business. You're not going to be hampered by an existing business that might be losing money. You can choose your own location. You can put together your own branding. You can put together your own marketing. You can put together your own relationships with your vendors and your clients, your customers. And you can explore new market directions. How exciting is that? You've got a brand new canvas, totally blank, that you can start filling in your business with. And that's fine. But also think about the fact that you have no history. I'm going to start with that. So if you're going to a bank and they're saying, okay, well, show me the money, you can't. You don't have the history to be able to do that. You're taking a bigger risk. Okay. Now, um, one way to mitigate the risk is to do this business on a part-time basis while you're still working and begin to build that up to a point where you could potentially leave it. So start it as a side gig and then have it become, your full-time career. That's a possibility. Um, you're this is definitely a riskier business, especially if you're ready to move on it and to quit your current job or lose income in order to do that. That's risky. And as I said before, you have no history, no track record. It's a lot more difficult to get financing. So buying an existing business might be a way around that. So you get established clientele and suppliers, potentially a known location, especially if it's retail. The business may be a known quantity with a proven formula and maybe even a name and some branding. Um, the one nice thing about it is that you potentially could review financial records. So I would advise you that if you're thinking about doing that, find a really good accountant that understands how to value businesses and to help you go through the however many years, and I wouldn't look at less than 5 years, 3 if you had to, but 5 years of business to understand how profitable they've been, what their accounts payables look like, what their accounts receivables look like, what their cash flow looks like, what their balance sheet looks like. And I would look at it year over year. I would look at trends, all those things. A good accountant can help you with that. Some of these things that I just talked about, cash flow, balance sheet, profit and loss statements, we are actually going to be introducing and talking about in session 4. Okay, so that you'll have a pretty good understanding of what those things are, how they work, and how they affect your business. So if it has a good track record, it might actually be easier to obtain financing. So there are some pluses there. Some of the disadvantages, potentially hidden issues, bad debts, poor reputation, potentially clients or customers being loyal to the owners and or an out of date inventory, or even legal transfer issues. So from a contractual standpoint, if that business owner has contracts with X, Y, and Z, either supplier or X, Y, and Z client or customer, um, is it legal? Is it in the contract that they've got with those companies that they can actually transfer that company to you? So those are things you need to look at. And again, not only have an accountant look at it, but have a lawyer look at it as well.
Basically, you need a team.
Yeah,
if you're gonna buy.
yeah, and bring in a mentor from SCORE. So, and as I talk about all of these things, realize this, that SCORE mentors can help you with any aspect of what we're discussing tonight and what we will over the next 4 weeks. That's what we're here for. So as you begin to work on your business plan, I suggest that you reach out to SCORE, get a SCORE mentor for somebody to help you out. That's what we do for our living, even though we don't get paid for this. It's volunteer. So those are some of the disadvantages there. Buying a franchise is kind of an interesting concept. So if you know what a franchise is, think about a McDonald's, think about an Applebee's, think about there's some great cleaning franchises out there. There's some home health franchises out there. Self-storage. For some people that are starting businesses, even power washing. So that's another. There are franchises out there that do that. So what's nice about that, if you've got a good franchisor, you being the franchisee, the owner being the franchisor, chances are, and I wouldn't work with a franchisor that hasn't, they have already established this business, and if it's a restaurant, they may have 2 or 3 or 4 or dozens of restaurants that are owned by the company. They use those to get started, to prove their process, to prove get their products and services up and running. So those franchisors that have that are the better ones to look at. They may have you will have marketing and sales power. Again, if you've got a good franchisor that has that, there probably is training and professional guidance. There are some franchisors that will take you on as a franchisee that don't require specific experience in those fields, and they'll help you, they'll train you, and a good franchisor will give you continued consulting relationship and access to other franchisees. So a long time ago, I used to work on Applebee's franchise meetings. They would be in some great places. So I would go to Hawaii and put together their meetings that their franchisees came to. And so there might be 200, 300, 400 franchisees in one place. They actually have a great opportunity to network and learn more about the business. Those are things that are not necessarily day-to-day franchise situation. But also think about the disadvantages. So it limits your freedom to make your own decisions, because most franchisors require you to use their systems, their products, their services, their marketing, and other things. And you pay royalties and fees. So you'll pay a franchise fee when you first open or buy the franchise. And then you are likely, and they all work differently, likely to be paying a fee off the top of the revenue. So what revenue you earn at the top, you're going to pay, I don't know what it is, 3, 5, 10%, depending on the franchisor. So that's one thing. You will probably be paying ongoing royalties, things like marketing fees, so on. And you will have binding contracts that limit your exit options. It might say that you have to sell it to another franchisee. You may also have to guarantee that if you're opening up a new area, let's say in Ohio, that you're going to open up X amount of franchises in a specific period of time. So those are all things you have to look at. But if you're considering a franchise, I would recommend that you work with 1 or 2 of the franchise brokers that are out there. There are a couple really good ones and honest ones. What's the one? FranNet is one, as a partner of SCORE. You could check with them. What I like about FranNet is that they vet, I don't know, 300 or 400 franchises, and they will not recommend anybody that doesn't meet their standards. So that's one of the things that you want to look at. And they work not unlike the way a real estate broker would be, where the actual franchisor actually pays for the fees. If you go through a company like FranNet, they will even look at you and your background and things like that and recommend potential franchises for you. But one way or another, whether you do it on your own or you go through somebody else, again, a lawyer, an accountant, a team of mentors, never do it alone. I would not recommend it at all. And if you're going to consider it, you want to look at the franchise agreement. You want to look at all the things, all the stuff that is in there, and they could be pretty thick. But I would definitely do that. But most franchisors, the good ones, will have a booklet that you can get that will totally outline everything that they do. So if you're interested in that, there's no reason why you can't just right away and ask for their information. They will also want to vet you as well. Some franchises are extremely expensive. I don't know if you can even buy a McDonald's anymore, but they're probably in the millions of dollars. I was at one point in time looking at a franchise I was considering, and you had to have a net worth of $1 million. Okay, that's one possibility. But there are some of those cleaning ones that I talked about. There are some really decent smaller franchises out there that are affordable. So I would look into that as well. And sometimes they will actually even help finance. Home-based, I'm not going to spend too much time on that. A lot of people are working out of their homes right now. It is likely to be some sort of an internet business, and those are all, decent. You got to look at those as well. Convenient work location, potentially less overhead. You might have more of a flexible schedule. Tax advantage is only in that if you're working out of your own home location, there might be a tax advantage there, and that's even hard to take advantage of as well. And you're anywhere in the world. You can hire people anywhere in the world. You can work regionally. You can work locally, depending on how you want to work. So a few disadvantages. You might have zoning issues if you're working out of your own home. You'll be isolated, and it might be very difficult to find financing if you need it, and obviously family distractions. And then the last part of what I wanted to talk about was nonprofits. So there are plenty of clients that we work with that want to start nonprofits. And in fact, Anita, who's sitting to my right over here, is one of our nonprofit experts. So I'm going to talk about it pretty high level, but the difference between a for-profit and a nonprofit is that obviously you're not making money that goes into the owner's pockets with a nonprofit. You're making money that goes back into the nonprofit for programming and to put together whatever it is that your mission is. If your mission is to help people, that's where the money is utilized for. And you need to have a board of directors. There's generally 3. I'm not going to go into that in any detail. Then you've got a mission that you need to work on. You can bring volunteers in. You potentially could qualify for government or foundation grants. Again, those are difficult to get in the first year as well. You have some protection from liability for the directors and the employers because it's housed under the general nonprofit. You can pay salaries to employees. You can pay consulting fees for contractors. If you are the director, you can get paid as well, but the profit stays in there, or the profit is then utilized, turned around, and spent for programming to manage your mission. So SCORE is a nonprofit, and I gave you our mission to help foster small businesses. We get a small stipend from the federal government, and in fact, Bob, who's sitting on my left, has been raising money for us for several years. And we don't need a big budget to operate because we're mostly volunteers, but we are able to get small corporations to give us money. We're able to get small banks to give us money, large banks as well, and other foundations that are interested in our mission. Some of the problems is that you've got to focus on that educational or that charitable purpose, and you can't make a profit. All profits, as I said, remain in the organization. You've got to be, you should be authorized as a 501c. There's several other designations for a nonprofit, but in order for you to have sales exemption, and also in order for anybody that's going to write you a grant through a foundation, they need to be able to write that money off. And if you are not recognized by the IRS as a nonprofit, they can't do that. So they won't contribute to your nonprofit. Online business, very similar to being at home. Lower startup costs. You have an expanded geographic reach. If you've got your website set up, you can do work 24/7. You don't necessarily have to be there. Low barriers to entry, and I'll talk about that. When anything becomes a low barrier to entry, that means I have a camera that I own. I can call myself a photographer. That's a low barrier to entry. Costs nothing to become a photographer. And I don't mean that in a negative sense, because it does cost to become a really good professional photographer. But consumers have so low barrier is going to mean much more competition for you. So when you think about your competitors, the lower the barrier to entry is, the more that they're going to want to enter into the same space you're in. And that's a real problem. Sometimes you just can't differentiate one from the other. So consumers have higher expectations, a little bit less tolerant of issues, and no personal contact if you're working again in your home on the website. So let's talk a little bit about the components of owning a business. And I've got this up here. Basically, you're wearing all the hats. So I work with startup businesses all the time, and they're working here, they're working on this little piece of it, they're working on that piece of it, they're down here doing marketing, they're out there doing social media, they're over here trying to get product out, and that's a real issue. So you need to think about how to structure your business. And that's a little bit about what Bob's going to be talking about. And we'll talk about that over the next several weeks as well. So we'll talk about marketing in the third workshop. We'll talk about strategies that are used to create desire and purchase. We'll talk about your products and services, how you will sell them. We'll talk about promotions and some of the things that you need to build your image, branding, name recognition, understanding your how qualified both your buyer is and how qualified your product is to get it out to the market. Market identity and advertising. We'll go into that a little bit, and we'll talk about how Anne has put that together for her nursery that we'll go into. Contact and connection with customers, that's all sales. And I'll talk about that a little bit in the third session. And we'll talk a little bit about presentations. So again, let's go back. What areas are you weak in? If you take this course, is that going to improve your skills? I think it will. If there are duties that don't fit your skills, can you hire employees to take on, or partners that can help bolster your skills? And that's going to be something you really want to think about. So let's talk a little bit about some other critical factors, in particular, understanding your competitors. When I talk to clients that are in the process of building businesses, in particular as it relates to marketing, I always tell them to begin thinking about what their competitors are doing first. So, go to their website, go shop them, especially if they've got a retail store. or if they are a service that you can actually talk to somebody about getting services from, or shop on their websites and see what they're doing. How big is their operation? Understand how many employees they have. Some of the quality and the pricing. Pricing is going to be an issue. So in order to understand where you fit in the pricing matrix of all your competitors, you need to know how they're pricing. Are they the top of the pack in terms of pricing, or are they the low price provider? Where do you want to be as it relates to that? We'll talk about pricing in a little bit more detail in session 3. And understand what services your competitors are providing. And again, you have competitors. So take a look at that, see how that fares with the ideas that you have. Sometimes we find out that a client will go out, take a look at their competitors to see what they're doing, and almost totally change their business plan around or their marketing plan around based on what they're seeing. Reputation, strengths, weaknesses. As I said, go to a store, visit them. I used to work in the audiovisual industry where I was working with large venues and working with companies that provided audiovisual to large venues. I always called my competitors and gave them a list of equipment and told them what technicians I needed and how to set it up and what production needed to be done. And I asked them for pricing, and they would send me, they didn't know who I was. I called as a customer. They didn't know who I was, and they'd send me a proposal. And I'd look at that proposal and I'd look at mine versus theirs to see what our price lists look like and how that worked out. Also, your suppliers are great to let you know what's going on in the industry and with um, your competitors. So, wanted to talk a little bit about the types of organizations that you might have if you're starting a business. If you're buying a business, you may already have the type of organization that's out there. So you can be a sole proprietor. And if you're a sole proprietor, you can get up tomorrow morning and call yourself whatever the company name is, and you're in business. What you will have to do, though, is report any income on your income tax. You'll have to file a Schedule C, and any income that comes into you personally is subject to income tax. But when you're starting your business, you need to think that through as well. Sometimes it's not bad to ask somebody in the accounting field or in the legal field which way is best for you. The one thing I can tell you, though, if you are a sole proprietorship and you have any liabilities or a lawsuit coming against you, you get sued personally by whomever is making that suit, and that's an issue. A partnership, again, the same thing. You and a partner get together, and tomorrow you're starting a business. You're calling it, Bob's Pretty Good Cookies. And Bob Fedor, who's sitting out there, Bob Cohen, me, are partners together. And we are going to build this business, and we can do that tomorrow. So again, income flows through your personal income tax. But the other thing that you want to think about is liability. And so if somebody gets a piece of glass in their cookie that I made and they want to come back and sue me, they're going to sue me and they're going to sue Bob. And Bob's Pretty Good Cookies are going to go out of business like that.
And you're going to lose your house.
And you're going to lose your house. And yeah. So think about that as you're going into business. Now, I'm not recommending one over another, but the one that I see most in our small business world is limited liability company. And you can also do a limited liability partnership in the same way. So an LLC is something that you register with the state of Ohio. You would go to ohio.gov, and I think somewhere in this presentation toward the back are links for those. And there is a wonderful booklet on how to start a business in Ohio. And I'm serious, it's really good. So I would do that. And it also will list sole proprietorship, partnerships, etc., and tell you in much more detail than I'm giving you tonight what each one of them is and what the effect is for you. But a limited liability company is set up such that you you are not necessarily liable, your company is. So instead of getting personally sued, your company would be and could get sued to the extent of the company business that the value of that business. There are some cases in which an LLC could be pierced, but that would have to be proven, and likely it would have to be negligence or something really bad that you did, criminal negligence, that type of stuff. A C Corp, I'm not going to get into in too much detail, except that if you set up a C Corp, that's a large corporation, you need to have a board of directors. You also need to have a charter. Actually, all of these have to have a charter except for a sole proprietorship. But you also have to issue stock, and you also have to have meetings on a regular basis, and you're also going to be tied into the IRS much deeper in a C Corp than you will be with any of these others. And an S Corp works similarly, somewhere between an LLC and a C Corp, in that you've got pretty much the same kinds of protection as a C Corp. And by the way, if a C Corp is sued, none of the directors, none of the owners, not likely any of the actual executives would be sued. The corporation would be sued. Same thing with an S Corp. The difference between a subchapter S and a C Corp is that in a subchapter S, the finances, your income flows through to you directly. I don't know a lot about it because we really don't do that much with it, but if you're interested in doing that, I would definitely check with an attorney on the best way to go about that.
That's generally when you have a fairly large number.
Right. Yeah.
6, 7, 10.
Yeah. Yeah, and there are other kinds of companies out there as well, limited partnerships, venture capital type stuff. But at this point in time, these are the ones that are top of the line. I see most of our clients doing LLCs. Go to ohio.gov, click on the business tab. There's a booklet. It's a wonderful booklet, and I think I've got a link in here to that.
I think it's only $90.
Yeah, it is. It's $99. Yeah, you also have to register the name, and that's an easy process as well. Anyway, so think about government regulations as you build your business. I don't want to get into too much of that right here, but if you're going to be hiring people, you're going to have Social Security and withholding payments to make. You're going to have workers' comp. That's something that's really important. I can't stress enough. If you're going to have employees, even if you're self-employed, you want to look into workers' comp, because if something happens and you don't have it, you're going to be in big trouble, not only legally, but also financially. Here we go. Property insurance liability, motor vehicle, umbrella liability, workers' comp, health, life. And if you have a partnership and you're building your business, you might want to have what they call key, I don't know, it's key man, they call it. I don't know if that's the exact name anymore, if that's even politically correct, but key person, yeah. And so you would actually insure each other. Okay. And again, if you're going to enter into a partnership with anybody, I would also get a really strong partnership agreement in advance of forming that partnership. Because if you don't, then you want to get out, they want to get out. You have no clue as to how to exit that. And with a partnership agreement, you will work out who gets what, if you go belly up, how people can buy each other out. And a good contract is something that if you're using it properly, it's written well, you put it in a drawer, you'll never need it. That's a good contract. And if it's not a good contract, then you're going to be fighting your entire working career. So I'm just going to talk about business plan basics. What I would encourage you to do is to read Anne's Nursery. It's not long. It's 7 pages. It's nice reading. It talks about Anne, how she set up her nursery. I think I don't know if a business plan is included with this. I think it is. If not, I will get one for one of the subsequent sessions. Why? would you do a business plan? Well, I look at it as a blueprint. Whether or not you need it for other people to see, it still should be a blueprint for you. It's an opportunity for you to articulate how you want your business to look, how you plan to do your production, what it might look like now, what it might look like in 2 years, in 3 years. Those are the things you want to think about with a business plan. But it encourages an objective view. And what I mean by that is a lot of business plans that I see that people write are um, aspirational. Okay. In other words, I'm going to do this. It's going to be great. My marketing is going to look like this. I'm going to make this kind of money, but they never think through step one, step two, step three, and they always think of it at an emotional level. If you're going to be in business, it is so important for you to think objectively about this business. So, one, is it going to work because X, Y, or Z? Is this area going to fail? You need really to look at it objectively. And then it becomes your foundation for planning. And it's also a great management tool because if you put together a good business plan, you can always go back to it in month 1, in month 6, in month 12, in month 18 to see how you're doing against your business plan. And it should be a fluid enough document that you can make changes to it. And then you can look at what you thought you were going to do versus what you're actually doing and figure out how to make it better. Look at trends, look at things that are actually happening in the business. And then the next thing you might want to consider doing is as you're going forward, use that business plan as a basis of a strategic plan on what you're going to do in year 1, 2, 3, 4, 5, and 10. And that's pretty important. And then, of course, it's going to help you think through and communicate your own ideas. So these are the sections in it. I don't want to get too deeply into it, but and Bob will talk about some of this next week. An executive summary, which I always tell people to hold off till last. Section 1 is going to be articulating what the business is. Section 2 potentially could be financial forecasts. Section 3 could be supporting data. Bob will talk about how to do that research next week. And then, I've already mentioned having a banker, lawyer, accountant, insurance agent, and certainly a business mentor. As you're working through your business and beginning to work through the plans, SCORE is here to help. And there is a small business ready assessment sheet, and I'm opening it up, I think, or not. See how long it takes to open. I think not. I actually might go back to the beginning of this. So let me, I don't know, for some reason it's not opening, but there is one in the handouts. What basically it's just asking you, to assess yourself where you're at right now. And if you go through all 5 of these, take that assessment again, and I bet you'll see a pretty big difference.
Good.
Oh, okay, it came up all on its own. Good. So you want to think about your idea, how feasible you think it is, what you know about the market, how you might consider implementing it. These are the beginnings of the beginning thought process in putting together your business plan. Okay. And so what you want to do, and it tells you how to do this, is score yourself. And again, as I said, I think that as you go through this session, all 5 of them, you'll have a different outcome than in the last week than you do in the first week. So I'd like to assign you some homework, okay? I think that when you come to the next session, you ought to have a vision statement in mind, okay? A vision statement basically is, what is your overall purpose of your business? What are you trying to achieve? And why are you going into business, okay? A good business is going to solve a problem, maybe create a new market. I don't know. But think about Are you solving a problem? Okay. Is there an issue in an industry that you're working on that you think that you have an answer to? Those are the things that are going to make your business, potentially make your business successful. Describe the products and services that your business is going to provide. And so when we talk about businesses, there are several types of businesses. There's business to business, which is generally a service business. So that might be, I'm an architect and I'm doing business with a builder. So my business, their business, business to business, business to consumer. I have a retail store, customer comes in and buys from me. That's business to consumer. Might also be the same thing on a website. You might be a manufacturer, you need a distributor. That's another type of business. So think about that. And as you're describing your business and your services, think about who you are. Are you business to business, business to consumer, supply chain? What part of the industry are you in? Because it's important to think about that as you think about how you're going to sell and what your marketing message is down the road. And again, I'm thinking way up here, but we are going to start funneling it down deeper into actual work. So describe your business, explain what is important about your business, and talk about the values that you think your business should live by. And I think that let's see if it's on the next slide or not. So it isn't, but it's going to be in the handouts that are in the front, or you may have already gotten that. I can go back to it for a minute if you like. What I would say is, be prepared, sign into simple steps. You can also look on SCORE, and there is a business planning roadmap on there, a series of about 12 modules that are interesting you can do on your own if you like. But begin thinking about some feasibility for your businesses, and you should have a business plan template, I believe. Start looking at that. We'll talk about the business plan and the financials in subsequent sessions, and then again, work with the SCORE mentor to fine tune your ideas. So here's where we're at. We just finished basics, and next week, Bob Feder is going to take you through your business concept. So that's another reason why if you have an opportunity to do some of that homework up front, you'll have begun the thought process that Bob's going to kind of pay off next week. So I see that we have some Q&A. I just want to read through a couple of those, all of them actually. Where can I get a copy of the PowerPoint? It will be sent to you. We've got a record of you having been online. It'll go to you. And it looks like, and you know what else? You'll probably find simple steps for starting a business on the SCORE website, recordings of prior sessions as well. So, that's there. Will we automatically be invited to subsequent sessions? Yeah, if you got an email to get to this session, then you will automatically be sent another one next week. I don't know what the time frame is on those. Do you have any idea, Anita? So, okay. Yeah. So Anita's saying if you have an opportunity, you can go to our website and register again for next week. Now it's singular, yeah. So I think there will be an announcement coming out for Simple Steps 2, and that should have a link for registration on it. By the way, if you need anything, and if something like that doesn't happen, let me give you my email address. It is Robert, ROBERT, dot, my last name COHEN, at SCORE Volunteer, all one word, .org. And that should help. Let's see what else we have in the way of. I'm looking to move into a new industry the SCORE have any information on that? Yeah, next week will be perfect. So if you can attend next week, if not, sign up for a mentor. But if you're available, then by all means, yeah, because we'll talk about the industries. Bob will talk about the industry codes and the classifications for those as part of your research. And so really next week, we're going to get into some some nitty gritty stuff about data and to research your industry and to research your competitors and so on. So that's what's coming up next week. I think that's it.
These are weekly, like, so this will be
Every Tuesday. It's
Wednesday.
every Wednesday. Every Wednesday.
full 5 weeks.
Yeah. So again,
7 o'clock.
Yeah.
You have an option online or.
Okay.
so tune in next week. If you need anything from me, let me know. Yeah, I can put my email in the chat. I'll do that if you guys can just bear with me for a second, because I'm a slow typist. Yeah, thank you. Of course, I have fat fingers. That's my problem. Everyone. Let me make sure it's correct. Robert.cohen@scorevolunteer.org. I think it's correct. There it is. All right. So, ladies and gentlemen, I appreciate you joining us tonight. Let me see. I think we might have one more question. Yeah, you'll be emailed. Okay. Yeah, I think I've answered the who is best to work with to filter down scope of services. You know, that's actually a really good question, because a lot of our clients, so I'm going to read this again. Who is best to work with to filter down the scope of services for a business? And we work with a lot of clients that come to us and they've got 10 ideas, or they have one idea with 10 ways that they could possibly do it. It's really important to focus, particularly in a startup business, in one area if you can, two areas at most, but to really have a focus on your business and to look at your business in terms of where that business is going to make the best money.
And
Yeah. Take a look at Ann's nursery, because and this relates to sales channels as well. Ann has, you'll see when you read this, 4 sales channels that she wants to sell to, and in the long run finds out that one of those channels is really not going to work for her. Okay, so she starts narrowing the focus of her business that way. So there are a lot of different ways to look at narrowing down your focus. It's your sales channel. It's where your clients are. It's where you're going to make the most amount of money. Let's say you're a manufacturer, or even if you're selling retail, how are you going to make the most amount of money? Always think about it this way. A lot of different ways you can think about it, but one way I would think about it is the most amount of money for the least amount of work. I mean, it doesn't necessarily correlate that way, but you know, you want to work smart, and so focus your business in working smart.
stores, mentors are very.
Yeah. So as Bob said, our mentors are pretty experienced at helping. Yeah. So if you have an industry that you're working in and you want to get a match from one of our SCORE mentors, there's an area where you can write about your business in the mentoring request. Then you just tell us as much about your business and what industry you're in, and we'll match you up as best we can. So did I answer everything? Yep, I think I did. So at this point in time, I think we're done. I'm going to stop sharing for a moment and ask you all to join us next week, same place, same channel. And I'll be here with Bob, and we'll work with you. Bob will be presenting simple steps too. And I look forward to seeing you next week. So take care, everybody. I'm going to sign off.